Hi there, my name is Eli Gillespie, and I am the owner of Gillespie Insurance Services in Redlands, California. And today we're going to be talking about EPLI, that is Employment Practices Liability Insurance. We're going to talk about what is EPLI. I'm going to go over some frequently asked questions that we get at this agency, and then we're going to look at the potential costs of an EPLI policy. So let's get into it. First, what is EPLI? So it's an insurance policy that pays claims for wrongful acts committed or alleged to be committed by an employer against its employees. So that is, the employer does something bad, a wrongful act. The employees don't like it, and they, or one of them, or all of them, sue the employer for damages because of that wrongful act. And that's how it works. It's an in-house policy. So you're going to wonder probably, what is a wrongful act? What are these things that we're insuring against? So I'll get into that, but first I want to say that not all policies call them exactly wrongful act, but maybe it's Employment Practices Act or Employment Practices Wrongful Act. We're going to just call them wrongful act because most policies use that and it's simpler. Also, there's not one singular definition of what is a wrongful act. Every insurance company has their own. Now, fortunately, they're fairly similar, and so we're going to go based on what most policies use. But just know that each policy could define it separately. Each insurance company can define a wrongful act separately. So you definitely want to look at your policy, if you have one, as to what is a wrongful act. So wrongful acts are things like breach of employment contract, harassment, including sexual harassment, bullying, hostile work environment, etc., wrongful termination, wrongful infliction of emotional distress, discrimination based on gender, race, age, disability, or some other protected status, of which there are many in California, where my business is. Retaliation, that's where an employee is doing something within the bounds of their rights. The employer doesn't like it, and so they do something as a retaliatory act negatively against the employee. Wrongful failure to employ or promote, negligent hiring, evaluation, and or retention, a violation of civil rights. Okay, so those are wrongful acts. Now, the policy can also include some other things like immigration investigation claims. So the Immigration Control Act of 1986 was passed, and if a business is harboring illegal aliens, they can be subject to an investigation, and this will pay some of the costs associated with that investigation. There's training costs. That's where if you have to, the business has to put on seminars, sensitivity training, discrimination training. Think of The Office season 1, episode 2, that kind of stuff. You can get those things paid for on these policies. Workplace violence. If, God forbid, there's a workplace violence situation, some policies will pay the cost for increased security, counseling, things like that. And lastly, wage and hour defense. So we're not going to get into that here, but I will later. But that's just an extra coverage that could be included. Okay, so there you have it. That is Employment Practices Liability in a nutshell. It's covering the business for wrongful acts. It pays for defense costs and the judgment or the settlement. So defense, settlement, judgment, that's what the policy pays for. And it is, of course, subject to the same types of parameters that most policies are subject to, like a limit of insurance, a deductible, a policy period. All those things are pretty standard on an EPLI that are standard on other types of policies. So now that we know what EPLI is, we're going to answer some frequently asked questions. First question being, what is my risk of having an EPLI claim? Why do I need EPLI? Why does a business need EPLI? Okay, so let's take a look. When asked a question, what are the top 10 lawsuits facing a business in California today? Here is what I got from the top 3 big AI answer engines, Gemini, Copilot by Microsoft, and ChatGPT. So the items in bold are most of those things that we discovered are a wrongful act and are covered or potentially covered on an EPLI suit. So look at that. Gemini, 1, 2, 3, 4, 5, 6, 7. 6 or 7. Now the items in italics, the ADA items, those are things that sometimes are covered. So I put it in italics instead of bold. But if you look at, if you can up both of bold and italics, each one of these is showing us that at least half of an employer's potential lawsuit in California is something that would be potentially covered on an EPLI policy. So that's kind of big. That's a big risk. All right, number 2, can EPLI coverage extend to third parties such as customers or clients? Yes, that's great. Thankfully, it is common to extend coverage to claims made by third parties. An example of a third-party claim would be where an employee makes a remark to a customer that makes the customer feel uncomfortable and the customer sues the business. That's a third-party claim, okay? Now, many insurers will automatically include third-party coverage. Some of them will not do third-party coverage, and some of them offer it as an option. So it's important to look at the details of your policy and to find out if you can add this coverage. All right, number 3, does EPLI cover wage and hour disputes? Okay, first, let me explain. And that was one of those things we talked about earlier. Let me explain what we're talking about when we say wage and hour. Okay, so a wage and hour violation is, in a nutshell, essentially when you, the business owner, improperly paid your employee. So you didn't pay them enough. You didn't pay them overtime. You didn't pay them for meal breaks. You withheld some deductions that they were owed. You withheld a reimbursement that you owed them. They don't like that. They sue you because of it. And now you have a wage and hour claim. So fortunately, policies will often pay wage and hour dispute claims. Okay? It's called wage and hour defense. Why is it called wage and hour defense? That's because no policy is actually going to pay if you, the business owner, actually owe wages. Okay? If you owe your employees wages because you didn't pay them, you're going to have to pay them. But the defense against the allegations are what could be covered on an EPLI policy through the wage and hour defense coverage. Okay? Number 4, are PAGA claims covered? That's the Private Attorney General Act of 2004, Private Attorneys General Act of 2004. So this is something that's been around for a long time. And PAGA is sort of like an informal class action lawsuit, okay, brought by your employees. A lawyer will be quick to tell us that there are many differences between a class action and PAGA, but just think of it in a similar manner. It's where a group of your employees get together and they file a claim. So the answer as to whether PAGA is covered is not a matter of whether it is brought on by PAGA or PAGA. It's a matter of, is the claim that they're making a wrongful act and thus covered on an EPLI policy? Okay, so if they're alleging, if the policy doesn't cover a wage and hour defense and the PAGA lawsuit is about wage and hour, then no, there's no coverage. But if the PAGA lawsuit is about an inadequate work condition that led to wrongful infliction of emotional distress, which is included on the policy, then yeah, the policy would pay. So the bottom line is being PAGA doesn't exclude or include coverage, okay? All right, so next, number 5, are civil and criminal fines covered? No. Civil and criminal fines are not covered. Do not look for any insurance policy to pay for fines that you incur by the government. It's like asking your auto insurance policy to pay for your speeding ticket. Okay, that's not going to be paid for. It will pay the defense costs and damages that result in a judgment, but if you actually have in addition, a fine or a penalty paid by the government, no, you're gonna have to pay that yourself. All right, that's an easy one. Number 6, are independent contractors covered? Well, that's a great question. Independent contractors are not employees. So if the policy has third-party coverage and an independent contractor files a claim as a third party for something that's covered, then yeah, independent contractor in that case would be covered. If an independent contractor is being treated like an employee and then files a claim as an employee, like wrongful termination or failure to promote, well, no, that's not going to be covered as a second party because they're a third party, okay? So now some policies do actually include a separate verbiage on the policy that will identify that independent contractors in the capacity where they're kind of acting like an employee, there's some coverage for them. Not all, but some. And the best remedy in this case would be to have third-party coverage and make sure that your independent contractors are very aware that they're not an employee. Now, I'll also explain real quickly that independent contractors is a broad term for subcontractors and vendors that provide services. So a general contractor who is, let's just say, a building developer who hires a framer or a drywaller, that's a subcontractor. That's a type of an independent contractor. That's not an employee. So those subs are not going to be covered as an employee on the EPLI policy. Some independent contractors they perform work around the business, but not in the business, like a sub. So like a janitorial service or an IT service, also not employees. So they're not going to be covered on a second party coverage. They could be covered as a third party though. Okay. So next question, number 7. What about ADA? Are ADA claims covered? Well, ADA is going to be very similar to maybe PAGA in that it doesn't really necessarily matter that we're talking about whether it comes through as an ADA violation. It's a matter of whether it's covered on the policy. So if an employee with a disability sues for damages, wrongful, disability discrimination, and they allege an ADA violation, well, that suit would be covered as a wrongful act. If you actually get an ADA fine from the government, no, that's a fine. That's not going to be covered. In a third-party situation, let's just say you're a restaurant and you fail to serve a disabled customer because you didn't have room for him, because you didn't make room for him because of an ADA because you didn't follow ADA codes. Well, again, third-party coverage could cover the damages, but it's not going to pay for the actual ADA violation should that business be subject to it. Okay, so those are our biggest frequently asked questions. Moving on, probably the biggest question we get is, how much does EPLI cost? That is a great question, and I will attempt to answer here. I'm going to share my screen here, and here we go. So I've put this together. This is a hypothetical business. It's an office-based business. Let's say it's a finance business, a loan officer, real estate, something along office-based, okay? They have 8 full-time employees. They've had no claims. They've been in business for 10 years, and they are California-based. Okay, so this first set of columns is a quote at $250,000 of coverage, all right? So each claim, first party coverage, that's the claim. I guess maybe we should call this second party coverage. Doesn't matter. This is the primary coverage. The claim is made against, these are the claims that are made from the employees to the employer, okay? 250,000 with a $35,000 deductible. That's pretty standard on a EPLI policy, 35,000. Sometimes you can get lower, but not often. Okay, so the coverage here, the policy costs $2,000. In this particular case, third-party coverage, which we talked about, is included, no additional cost. Immigration investigation is included, workplace violence is included, no additional cost, and wage and hour is also included, no additional cost. That's kind of rare, and I'll explain why in a second, but just note that each of these has their own separate sublimit. Well, third party is subject to the main limit, but immigration is 100,000, workplace violence is 250, so that's actually up at primary policy limits. Wage and hour is 150,000. Okay, so they each have some have deductibles, others don't. Workplace violence has no deductible. All the others have the same deductible as the primary coverage. Okay, now I also wanted to show you taxes and fees. Most of the time, a standalone EPLI policy is provided by a non-admitted or what's called an excess and surplus lines insurer. And when you get a policy through a surplus lines carrier, you get a state tax and a stamp fee in California. Most other states too, but this is California rates. Okay, and then it has to go through a wholesale broker to get that policy, and so they usually charge a fee. Okay, so just want to show you so it's more realistic, this policy premium. The bottom line is $2,263.60. All right, now let's look at a $500,000 policy. This is actually the same cost, and I told you I'd explain why. And the reason is because what we can surmise is there's just a $2,000 minimum policy premium. Okay, so this company who I quoted said, our lowest premium is $2,000. So that's why all these coverages are essentially free, because that's the policy minimum premium. So when we went up to $500,000, we didn't incur any additional premium to double the coverage. So that's great. And this is common. That's why I wanted to show you that this kind of stuff happens. So same thing here, third party coverage goes up to policy limit, sorry, same deductibles. Immigration is also at 100, it's included. Workplace, so 250 is a cap. We couldn't get it to go up to 500,000. No deductible there. Policy coverage is included. Wage and hour defense, now we're finally getting beyond policy minimum premium, so there's a $25 charge applied to this. That's really cheap. And then total coverage is $2,289.40. Same broker fee. Taxes are a little bit more because the premium is a little bit more. Net difference is only $25.80. Okay, that's not much. Okay, now we're going to go up to $1 million. So now here you actually see the premium changing, $2,000 to $2,500. So that is 25% increase for double the coverage. That's pretty good. Okay, so third-party coverages up to $1 million also included. Everything else here is the same as all the other coverages. Only difference is because this is a bigger policy, they're just charging more. Okay, even though the 150 is the same. So now we're going to talk about this. intentionally omitted these two coverages on all three options. So I'll explain it at the same time. Okay. So defense costs can be inside the limit or outside the limit. And if they're outside the limit, they could have their own charge. Okay, so that's what you have here, $1 million of defense costs outside the limit of insurance. So when the defense costs are inside the limit, that erodes or depletes your limit of insurance. So if we do defense inside the limit on all these, one, you can see that the cost is still pretty minimal to jump from $500,000 to $1 million. Okay, but if his defense is inside the limit, what that means is if you have $50,000 of defense costs, you now only have $200,000 left to pay on your policy. In this case, you would have $450,000 left to pay on your policy. And in this case, you'd have $950,000 policy left to pay on your policy. Now, if we do defense outside the limits, this is where you have an additional coverage, an additional pot of money to pay for defense costs. So you can pay, this insurance company will pay up to $1 million without depleting this limit of insurance. Okay, so let's just say you've incurred $250,000 of defense costs. You still have $1 million left to pay on your policy due to damages, judgments, settlements. Okay, so pretty nice. This is definitely a better deal is to have, or a better policy to have defense outside the limits. And then let's look at the last thing, retro date. So a retro date says this is how much we'll go, how far we'll go back to pay for claims that are rolling in on this policy. So we have a policy in place right now, but the claim took place 5 years ago. The actual incident took place 5 years ago, but we're filing the claim now. Yes, the policy will pay. Let's say the incident took place 7 years ago, but the claim is being filed now. Yes, the policy will pay. Let's say the claim took place 12 years ago. The incident took place 12 years ago, but the claim was made today. No, there's no coverage, okay? Because that went beyond that 10-year retro date buffer. Okay, so that's essentially how it works. Now, I also wanted to go over some of the other factors that make this policy cost what it costs. I explained that there are, that this was an 8-person shop. We had we had the different limits of insurance. It had been in business 10 years and it was based in California. So those are the things that affect the cost of an EPLI policy. And I also wanted to add that risk management of the business is also a big factor in how much the policy will cost. So when I say risk management, I mean things like employee handbooks, harassment and discrimination policies and procedures, and other HR practices like hiring and firing. So if the business has all these things in place and shows the insurance company that they're doing their best to prevent claims from occurring, then that business will be subject, most likely, to better rates. And also another thing is claims history. So history, if a business has been in business for 20 years and had no claims, that bodes well for them. They're probably subject to lower rates. If the business has had 10 claims in 20 years, that's bad. They're probably going to have higher rates. If a business is brand new, they have no history, they're probably not going to get the best rates. Maybe not as bad as the one that has lots of claims, but they're probably not going to get the best rates. So if you have a track record of no claims, that's going to help you get a better rate, okay? So there you go. That is what a policy could cost and why it may cost what it costs. And let's get to the last question. I know it's on everyone's mind, which is, how do I get a quote? Eli, I want a quote from your company on EPLI insurance? How do I do it? Okay, great question. You just go to our website. Okay, so let me share my screen here. You go to our website. Here's the URL right here. I will put it in the show notes below. And all you have to do is you can click on this get a quote here. You input your name. You're going to check the box for EPLI. You can write us a nice little note, answer the question here, hit submit, and this will go to one of our agents. One of our agents will reach out. They'll ask you some follow-up questions, and they will gather all the information necessary, send it to our insurance companies, and we'll get the best quote that the market has to offer for your business. It's no obligation and it's free, but it will help you see what the costs can be. So reach out if you want to get a quote, or if you just have any questions about employment practices liability insurance in general. I'm happy to help, love to help. Thank you for listening, and I will see you on the next video.